Welcome to our podcast, where we share our professional knowledge and experience for those considering commercial mortgages or loans. If you are in need of commercial mortgages or loans, contact us for a no-obligation free consultation. Let's start today's episode. Understanding business loans. When it comes to growing your business or addressing financial needs, secured business loans can be a viable option for UK businesses. It's crucial to understand the basics of business loans to make informed decisions that will benefit your company's growth and stability. Business loans are a type of financing that allows companies to borrow funds from a lender. These funds can be used for various purposes, such as expanding your business, purchasing equipment, or covering operational expenses. The borrowed capital is paid back, usually in monthly installments, until the debt is cleared. Compared to other types of loans, like personal loans, business loans generally offer higher borrowing amounts. Secured business loans, in particular, require you to put down assets as security, which gives the lender the right to repossess the assets if you can't repay the debt. This type of collateral-based loan is advantageous for lenders as it reduces their risk, leading to lower interest rates for you. To apply for a business loan, you'll need to meet certain eligibility criteria, which may include your company's trading history, revenue, and credit score. Lenders may also assess your business plan and financial projections to gauge your ability to repay the loan. As you consider securing a business loan, it's important to evaluate different lenders and loan types to find the best fit for your business needs. Factors to keep in mind include the loan amount, repayment term, and interest rates. Comparing multiple loan offers will help you make an educated decision for your business's financial well-being. In conclusion, understanding business loans, particularly secured business loans, is essential for UK businesses looking to obtain capital for growth or other financial purposes. By assessing your eligibility and comparing loan offers, you can select the right lending option and ensure your business's long-term success. Secured business loans. Secured business loans offer a way for you to obtain funding for your business by using assets as collateral. They allow you to borrow larger sums of money compared to unsecured loans, and can be a helpful finance solution for your company's needs. When opting for a secured business loan, you provide an asset, such as residential or commercial property, as security. This means if you cannot repay the debt, the lender has the right to repossess the asset to recover their funds. This type of loan can be used to fund business projects, cover everyday expenses, or improve cash flow throughout the year. When considering a secured business loan in the UK, you can find various options from leading banks and financial institutions. For example, some banks offer secured business loans ranging from £1,000 to £25,000, with fixed interest rates and the option to take a repayment holiday. Before applying for a secured business loan, it is crucial to evaluate your business's financial situation, as well as the risks associated with using your assets as collateral. This ensures that your company remains in a stable position and avoids potential issues in the long term. As you explore various secured business loan providers in the UK, it is essential to compare their offerings and interest rates. We can assist you by presenting available loan options and highlighting their respective features. In conclusion, secured business loans can be an effective way to access additional finance for your company. However, it is crucial to understand the associated risks and carefully assess your collateral before committing to a lender. Making an informed decision will contribute to your business's financial stability and success. Eligibility and application process. When considering a secured business loan in the UK, it's important to understand the eligibility criteria and application process. By being knowledgeable and prepared, you can increase your chances of obtaining the financial support your business needs. Firstly, you should evaluate your eligibility for a secured business loan. Lenders will assess your credit history, which plays a significant role in determining your loan prospects. A strong credit score demonstrates a lower risk for the lender and can result in more favorable interest rates for you. If your credit history is less than ideal, it might be worth taking steps to improve it before applying for a loan. Another crucial aspect is the lending criteria set by the financial institution. These criteria typically include aspects such as your business's turnover, profit margins, and existing debts. You should familiarize yourself with these requirements and ensure your business meets them before applying. Next, you'll need to gather the necessary documentation for your loan application. This typically includes a detailed business plan outlining your company's objectives and growth strategy, financial statements such as profit and loss accounts and balance sheets, proof of asset ownership, which will be used as collateral for the secured business loan. When submitting your loan application, ensure all documentation is clear, accurate, and well organized. This will not only reflect positively on your business but also streamline the application process. During the application process, the lender will conduct a valuation of the asset you plan to use as collateral. This assessment determines the amount you can borrow, as well as the interest rate you will be offered. Ensure your asset's value is accurately represented, as lenders may reject an application with an overvalued asset. In summary, securing a business loan in the UK requires careful consideration of your eligibility and understanding the application process. By focusing on your credit history, meeting lending criteria, and submitting a thorough application with the necessary documentation, you can confidently navigate the process and obtain the funding your business needs. Loan terms and interest rates. When considering a secured business loan, it's crucial to understand the loan terms and interest rates offered by various lenders in the UK. With secured loans, you can typically borrow funds over terms ranging from 1 to 12 years, giving you flexibility in choosing a repayment plan that suits your business needs. For instance, some banks offer secured business loans with terms from 1 to 12 years and fixed interest rates. Interest rates on secured business loans can either be fixed or variable. A fixed rate means that the interest rate on your loan remains constant throughout the loan term. This helps you plan your repayments with certainty, as you know exactly how much you'll be paying each month. On the other hand, a variable rate fluctuates according to market conditions and may result in lower or higher interest rates over time. Most lenders offer competitive interest rates for secured business loans, as the collateral you provide reduces their risk. You can often find lower interest rates than those available for unsecured loans, depending on your credit score, trading history, and collateral value. However, remember to compare rates across different lenders to make sure you're getting the best deal for your circumstances. Keep in mind that certain fees and charges may accompany your loan, such as arrangement fees, early repayment fees, or valuation fees for the collateral you provide. Be sure to inquire about these additional costs before committing to a loan agreement. Taking the time to understand loan terms and interest rates can help you make a well-informed decision about which secured business loan is right for your business. Remember to assess the full cost and repayment requirements of your chosen loan, and how they fit with your business's cash flow and financial goals. Loaned assets. When considering a secured business loan, it's important to understand the types of assets you can use as collateral. Assets can range from property and vehicles to commercial property and other tangible assets. In this section, we'll discuss the various assets that can be used to secure a loan and their respective valuation processes. Firstly, you can use property as collateral, such as your home or commercial premises. Properties can often be valued quickly and provide a high level of security for lenders. The value of the property is determined by a professional valuation, taking into account factors such as location, size, and current market conditions. Another asset that can be used for collateral is vehicles, like company cars, vans, or lorries. The value of vehicles depreciates over time, so it's crucial to ensure your vehicles are accurately appraised and maintained. For valuation purposes, you may need to provide details about the make, model, age, and overall condition of each vehicle. Commercial property is another popular type of collateral for secured business loans. This could include offices, warehouses, or retail spaces. Similar to residential property valuation, factors like location, size, and market conditions will play a significant role in determining the commercial property's value. In addition to the above, tangible assets such as machinery, equipment, and inventory can also be used as collateral. The appraisals of these assets will be based on factors like their age, condition, replacement costs, and market value. It's essential to keep these assets in good working order, as they may lose value if they're not properly maintained. Lastly, commercial assets like intellectual property, patents, and trademarks can also act as collateral, although their valuation can be more complex than tangible assets. These types of assets will likely require a specialist to determine their value, taking into account the potential income they can generate, market demand, and the asset's lifespan. In summary, a variety of assets can be used as collateral for secured business loans, including property, vehicles, commercial property, tangible assets, and other commercial assets. Accurate valuation of these assets is crucial in determining the loan amount you can secure and ensuring the lender's confidence in your ability to repay the loan. Remember to keep your assets well maintained and up to date to preserve and potentially increase their value. Risk and repayment factors. When considering a secured business loan, it's crucial to understand the risk and repayment factors involved. As a borrower, you need to be aware of the potential consequences of defaulting on your loan, as well as ensuring that the repayment terms are manageable for your business. One of the primary risks with secured business loans is the possibility of losing the asset you've put up as collateral. In case you are unable to meet the repayment terms, the lender can sell your asset to recover their funds. This could potentially be detrimental to your business operations, particularly if the asset in question is essential to your company's functioning. Secured loans often come with more favorable interest rates compared to unsecured business loans, as the risk to the lender is diminished by the presence of collateral. Ensure you assess the rates available and choose a loan that provides your business with a manageable repayment plan. Defaulting on your loan will not only result in the loss of your asset but can also negatively affect your credit score and future ability to obtain financing. When negotiating repayment terms, always take into account your business's cash flow and financial projections. An extended repayment period may be beneficial in allowing your business to grow and generate more revenue before having to fulfill your loan obligations. However, it's essential to remain realistic about your ability to meet your repayment deadlines, as failing to do so could lead to further financial difficulties. In summary, when pursuing a secured business loan, it's paramount to thoroughly assess the associated risks and repayment factors. By doing so, you'll ensure that the loan terms are a manageable fit for your business, and simultaneously minimize the potential for default and the subsequent loss of your asset. Unsecured business loans. Unsecured business loans can be a great option for your business if you do not have any assets to offer as collateral, or simply wish to avoid the risk associated with secured loans. These types of loans are available to both new and established businesses and can potentially provide you with a cash injection quickly, sometimes even on the same day. When comparing unsecured business loans, it is important to consider the interest rates offered by lenders. Unlike secured business loans, unsecured loans typically have higher interest rates due to the increased risk taken on by the lender. So, it's crucial to shop around and find the best rates for your business to minimize your repayment costs. Credit scores can also play a significant role in the approval process, as well as the terms of your unsecured business loan. Your credit history is likely to influence the interest rate offered to you. If you have a good credit score, you are more likely to receive more favorable rates, while those with less impressive credit histories may face higher interest rates or even struggle to secure an unsecured loan. There is a wide range of unsecured business finance options available, including credit cards. Business credit cards can be a flexible and convenient way to access funds for your company when needed. However, it is essential to be mindful of the fees, interest rates, and payment terms associated with credit cards, as these can sometimes be higher than traditional unsecured business loans. In summary, unsecured business loans can provide essential funding for your business without the need for collateral. Carefully research your options and consider the interest rates, repayment terms, and credit score requirements before applying for an unsecured loan or credit card. By doing so, you can maximize the benefits of this financing option while minimizing the costs associated with it. Alternative financing options. If you're considering financing options for your business, secured business loans are not the only solution. Here are some alternative methods to fund and grow your company. Peer-to-peer lending is an increasingly popular choice for businesses in the UK. This form of financing connects you directly with investors who are interested in lending money to your business, cutting out traditional intermediaries like banks. These platforms often offer competitive interest rates and flexible terms. Invoice finance can help improve your cash flow by allowing you to access funds tied up in unpaid invoices. This alternative funding option involves selling your invoices to a third party, who will then advance you a percentage of the invoice value. The remaining balance will be paid to you, minus fees, when the invoice is settled. Asset finance allows you to spread the cost of purchasing assets for your business, such as machinery or vehicles, over a set period. This type of financing is suitable for businesses that need to invest in expensive equipment without compromising their cash flow. By considering a range of alternative financing options, you're more likely to find the most suitable solution for your business needs and ensure its success in the long run. Role of Financial Conduct Authority. The Financial Conduct Authority, FCA, plays a crucial role in regulating secured business loans in the UK. As a business owner, it is essential for you to understand the FCA's function in the financial services industry. The FCA is responsible for maintaining the stability and integrity of the UK's financial sector. Through this organisation's regulatory oversight, you can expect that firms providing secured business loans adhere to strict standards, ensuring a fair and transparent market for borrowers like yourself. The FCA's core objectives include consumer protection, maintaining a stable financial industry, and promoting effective competition. The FCA enforces its rules through the FCA Handbook. This comprehensive guide outlines the requirements for businesses operating in the secured loan sector, and provides you with the necessary information to verify their compliance. By following the FCA's rules, lenders and brokers are expected to demonstrate responsible lending practices, protecting your interests when you access secured business loans. As you search for the right secured business loan provider, it is essential to verify that the firm is regulated by the FCA. An FCA-regulated lender or broker indicates that the organization meets the necessary criteria to provide secured business loans, thus ensuring a safer borrowing process for you. In summary, the Financial Conduct Authority's role is to ensure the UK's secured business loan industry operates ethically, and its regulations protect your interests as a borrower. By understanding the FCA's function and requirements, you can make informed decisions when choosing a secured business loan provider. Pros and cons of secured business loan. When considering a secured business loan, it's essential to weigh the pros and cons. This will help you make an informed decision on whether this type of financing is suitable for your needs. Pros of secured business loan. Larger loan amounts. Secured business loans allow you to borrow larger sums of money, as the amount available depends on the value of the assets you put down as security. This means the more valuable the collateral, the larger the amount of money you can borrow. Lower interest rates. Secured loans typically offer lower interest rates than unsecured loans. This is because the lender has the option to recover their losses by claiming the collateral if you are unable to repay the loan. Longer repayment terms. With a secured business loan, you may be offered longer repayment terms, which can make it more manageable to spread out your payments over time. Cons of secured business loan. Risk of losing assets. The primary disadvantage of a secured business loan is the risk of losing your collateral if you can't repay the loan too. If this happens, you could lose valuable assets necessary for your business operations. Longer approval process. Due to the need for collateral assessment, the approval process for secured loans can be more time-consuming than that of unsecured loans. 3. Restrictions on collateral usage. Secured loans may come with certain restrictions on how you can use the collateral, limiting the flexibility of your business's finances. 3. Ultimately, it's essential to consider both the advantages and disadvantages of secured business loans when determining the most suitable financing option for your business needs. What assets can be used as collateral for a secured business loan? You can use various assets as collateral for a secured business loan, including commercial property, residential property, land, machinery, and equipment. Some lenders may also accept assets such as inventory, accounts receivable, or future invoices. It is essential to discuss the potential collateral options with your chosen lender to ensure it suits their requirements and your own situation. How do secured and unsecured business loans differ? The main difference between secured and unsecured business loans lies in the collateral requirement. With secured loans, you will need to provide an asset as collateral, which the lender can claim if you fail to repay the loan. This usually leads to lower interest rates and longer repayment terms. On the other hand, unsecured loans do not require collateral, but they generally come with higher interest rates and shorter repayment periods due to the increased risk for the lender. What are the top secured business loan providers in the UK? There are several well-established secured business loan providers in the UK. However, it's important to research and compare multiple lenders to find the most suitable secured business loan provider for your specific needs and circumstances. What are the eligibility criteria for obtaining a secured business loan in the UK? Eligibility criteria for secured business loans may vary among different lenders, but typically, you should have a registered business in the UK with an active trading history and demonstrable ability to repay the loan. The business should also hold sufficient collateral, such as property or equipment, to secure the loan. Some lenders may also require a minimum annual turnover or a specific credit score. What documents are required when applying for a secured business loan? When applying for a secured business loan, you may need to provide several documents, including your business plan, financial statements, cash flow projections, and collateral documents. Additionally, you might need to provide personal identification, proof of business registration, and bank statements. The specific documentation requirements may vary depending on the lender and the type of collateral you offer. Are there any alternatives to secured business loans for startups? Yes, there are alternative financing options available for startups in the UK, such as unsecured business loans, peer-to-peer lending, crowdfunding, grants, and angel investors. These options typically have different eligibility requirements and may not need collateral. It's essential to carefully evaluate and consider each alternative to determine the most suitable financing solution for your startup's needs. For more information, you can contact us by clicking the link in the description of this video. Thank you for listening to our podcast. We look forward to coming together again in the next episode to share more information and experience with you. For now, goodbye.